Hello, this is MeTime Television exploring American cuisine. With the opening bell corner, this corner is broadcast live simultaneously with MyTime Television. Inside that, we will explain with a focus on macro and interest rates. And after the macro and interest rate segment ends, this corner will be briefly paused and then move on to the United States stock sector analysis corner. In this corner, among mid-cap and small-cap stocks, I will analyze the blue-chip stocks, and even for large-cap stocks, I will select stocks with good momentum and introduce them to you at the right time. So through the stock discovery system provided by Choice Sang, I collect and organize data on these stocks as the basis for my analysis. The things that come out here are not recommendations to buy right now. So if you know how various people make their final decisions and how they look at these stocks based on this data, I think it will be helpful. For those starting with premium services, carefully watching these videos is recommended to learn the initial features and gain essential skills. This approach allows you to make informed decisions based on comprehensive analysis, even without buy signals. It enables you to identify promising stocks early, rather than simply following signals blindly. That's my perspective.
Today's first.
Molday.com is a standout company in its industry. It's a SaaS company that provides business task management platforms. I chose Monday.com as an example for a specific reason. I wondered if there was any special meaning to Monday, or if they just chose Monday because it's the start of the work week. Maybe they wanted a company name that relates to productivity and getting things done, so they picked Monday. So I checked the official website of a Korean company as an example, and after that I'll analyze the price plans, the pricing variations, and then look at the model and the 3 different values and break them down for you. Monday.com. Recently, I looked up the stock performance, and this stock has dropped by about 41% from its highest point. The stock price recently increased from about $200 to nearly $300, a 50% rise. However, it hasn't fully recovered despite the 50% increase because the previous 41% drop was from a higher starting point. This is because the percentage drop and the percentage rise are different when the base changes. So, if a stock drops by 50%, it actually needs to rise by 100% to get back to where it was. Dropping from 100 to 50 is a 50% decrease, but recovering from 50 to 100 requires a 100% increase to get back to the original value. So, in the same way, even if a company's profit drops by 50% from a certain point, just like with stocks, the profit has to increase by 100% to get back to where it was. So, in short, Molday.com is a company that is sensitive to changes in stock prices. It's good for those who know and invest. So, when you hold on to a stock for a long time and experience this kind of correction or a sharp drop, and then another unexpected event happens, Monday.com is fundamentally a company with high stock price volatility. Even though Jisu's earnings fluctuate a lot, the actual stock price also shows significant volatility. So a 15% change in a single day is not unusual. This industry is good for short-term investors, but I prefer long-term investing without worrying about such things, so it's better for me to stick to patterns that allow investing with peace of mind. Let's review the data. First, is it a utility company? This company provides business task management platforms, and it's a SaaS company. Project management companies collaborate online, so you can think of it as a program that allows you to manage projects together from planning to completion and see the progress in real time. They offer a subscription service. The company is headquartered in Israel and listed in the United States. Because it's 50 people, it's not that high. Among American companies, their actual market share is about 38%. So it's a bit ambiguous to call them the overwhelming leader, but why would I introduce them? If you look at it this way, their growth rate is 85 points, which puts them in the top 1%. So right now, they don't have much competitiveness, and their profitability is also very low. If you look at it this way, it's not good. Profitability is low, but on the other hand, their current cash generation is at 75 points, which means they are in the early stages of growth. That's what this tells us. So when a company with these characteristics appears, it's good for developing into an early growth stock. But as this growth stock starts to make a lot of money in earnest, it tends to become a mature type like this. I want to buy before it goes up. If you can find companies that are emerging in this triangular shape, that's great. In the stock market, we call these growth stocks, emerging stocks or growth stocks. If you keep looking for them, you'll find a lot of lists that come out in this triangular form. Also, developing your own style based on this pattern is one of the good ways to invest. While not considered a blue chip stock on Molday.com, early stage growth stocks are introduced there. Understanding this perspective is key. The composite score ranges from 46 to 50, and we are providing these types of stocks. Is it a blue chip company? When you look at business profit, if you look at it based on operating profit, it's the principal. And if you look at it based on net profit, it's the net profit margin. This is how the standards are set. Annualized means you add up the values of the most recent 4 quarters and look at it as if it's for a year. In English, the data is usually called trailing 12 months quarterly. If the previous quarter was in deficit, the operating profit turned positive from 0.06 billion won to 0.1 billion won, an increase of about 100 million won. The net profit was 0.27 billion won or 270 million won, which is not a significant amount yet. So, if you look at the characteristics of the SaaS industry, once it turns profitable, as sales increase, the leverage and operating leverage grow rapidly. That's one of the key features of the SaaS industry. As the customer base grows, there's little need for additional investments in tangible assets. As a subscription-based service, you only need to set up a few servers to begin. So you can see that it's a business with a pretty good initial structure. Next, in the case of companies like this, you can see that there are 3 types of turnover: inventory turnover, receivables turnover, and payables turnover. But since there is no inventory, where would the service company's assets be? So there is no inventory turnover at all. If you look at the accounts receivable turnover days, it's about 9 days. That means, on average, it takes about 9 days to receive payment after making a sale. In other words, it refers to the number of days from when you provide the service and bill the client until you actually receive the payment. When we say 9 days, it means after the company settles the payment, it takes around 9 days to get the cash, mainly for subscription services. If you mainly register and pay by card, the card company will settle the amount with you weekly or bi-weekly, providing cash within that period. That's why, in reality, the company's operating funds are not needed as much as you might think. Because the cash flow is quick, this is a very good business. This company has fast sales growth, quick cash inflow and outflow, and short days of inventory. So it's a great industry for generating cash. So you can actually see this in the cash flow statement as well. If you look at the cash flow statement, the net profit is about 5.3 billion won, but the operating cash flow is 3.3 billion won. That's why the company is said to have a strong cash flow generation ability. So, in the end, net profit follows operating cash flow, and it is likely to improve further in the future. So, when you look at it in that way, you can see that business activities are recorded like this in the plus column. In a good company, investment activities are usually negative, while financial activities are positive. A positive financial activity indicates that the company is generating cash inflow through financing. Financial activities can be divided into 2 categories. The first is borrowed money, like loans, and the second is money received by issuing new shares. So these are the 2 main things that make up capital. So when we talk about financial activities in a broad sense, it means either borrowing money or issuing shares to raise funds. It's always one of these 2. So you can check that in the financial statements. But in this company's case, since it has cash, it's not increasing its borrowings, but rather it's raising money through stock options or issuing new shares. That's why its financial activities are not a problem even if they're in the plus. So there's no problem with the cash flow statement either. If you look at it this way, it should be fine. If you look at the actuals after the forecast, the stock price earnings per share chart is a chart that shows you the company's stock price after the forecast. So it's a chart you can refer to. Here, you can also see the support levels that are formed as the stock price enters this range. Again, a sharp rise, then a sharp drop, again a sharp rise, then a sharp drop, rise, drop, rise, drop. This kind of pattern keeps repeating. So, if you invest aggressively in these kinds of patterns on the modern.com, you have to endure these kinds of movements. If not, you might get anxious and sell when the price drops in the middle, but then you could regret it when it goes back up. Overcoming these patterns and holding on or not might lead to fear-driven selling or repeated buying and selling. This is typical behavior of unsuccessful investors. Earnings per share is growing steadily, indicating a likely rise in stock price. However, be mindful of the high volatility as it increases. Overall, it appears promising. The Joy Sang app has been released. You can download it from Google Play or the App Store, and once you receive it, you can conveniently check various categories in different sections, so I think you'll find it very useful. I'll show you the actual expected performance. The sales growth shows a steady annual average of around 25% with rates of 25%, 23% and 23%. The earnings per share growth rate is 86%, 49% and 53%. It's a strong growth stock. It's not easy to find this kind of growth stock. Growth stocks are abundant, but predicting their price changes is challenging due to high volatility. However, if you can manage this volatility, there are many opportunities to buy growth stocks at favorable prices. Among growth stocks, we can identify those in strong and solid industries that are growing rapidly. Next is the second valuation. When discussing valuation, we often refer to it as a color gap. Dongorami and other regional groups were once considered high-value companies. If they enter the high-value range and then fall to a lower valuation, they can show a pattern of decline. You can follow that pattern, or you can just buy and hold until the end, or just keep it there if you don't know well and then sell when it goes up. Right now, this yellow line has dropped to a fair value and then it comes back up, so it's currently somewhere between fair value and overvaluation. It's a situation that's neither cheap nor expensive, but somewhere in between. Because these indicators are still rising, with earnings per share continuing to go up and sales amounts increasing, these bands are likely to move upward in the future. If the stock price is adjusted, it becomes a good price. Even if it isn't, you can judge by looking at patterns and indicators to assess the stock's future potential. These indicators suggest a positive outlook for the stock. And finally, if you look at the stock momentum chart, you can see here as well that these kinds of changes are very severe. Buy volume, sell volume, buy volume, sell volume, there's a huge amount of this coming out. Right? At one point, the sell volume increases, then the buy volume increases again. And when the buy volume comes out, this is a sign of a moving average. That's why the stock price is already clearly moving to the next step. So when you use this kind of short-term momentum, even if you look closely, it's a pattern where the possibility of quickly going from a high point to a low point, or from a low point to a high point, is high. This is directly related to the volatility of the stock price. So if you refer to this part and try to follow the momentum blindly, if you just refer to the moving average more passively, what happens? It becomes a very personal interpretation. If the valuation band is close to the high point and the stock price goes up, it tends to move only a little. And if you keep doing it this way, a strategy is to sell stocks at the upper end of the valuation band and repurchase them when the price drops. If you're uncertain and the volatility is high, it can be difficult to hold on. You might end up selling everything based on your own instincts. At the end of the site, I moved and tried to briefly summarize the current situation of Monday.com for you. Currently, it's $302.07 up, around 4% from yesterday. That's good, yes. If you want to add a stock to your watch list, press the heart on the right side. From here, you can also create a group, or you can add it to your watch list or to the market cap tab like this. If you set it yourself, you can manage multiple portfolios by group, and you can see things like the purchase price for each group, so it will be easier to manage. Currently, Meisu Shinho is with me. By the way, when will Meisu Shinho be coming out? The signal appeared on April 25th, some time ago. The stock is up 13% with stable volume. Over 6 months, buy signals have appeared during sudden surges. As long as the current situation persists, a sudden buy signal is unlikely to emerge. The reason is that most of these things were already mentioned in advance in algorithm update news, so I try to prevent losses as much as possible through preemptive trading. That's why I didn't force anything even when there was nothing to do. This year, the volatility has been so severe that it's been really tough. Even if you entered at a good price, getting shaken out easily led to cutting losses, buying again and cutting again. This pattern was quite common. Recently, when money flows in, it's a buying signal, but soon after, it gets shaken out again. Currently, it's showing a more favorable trend with a gradual upward movement. It's showing an upward trend, and if you look at it now, you can see that the supply side is maintaining a slightly better momentum. In the midterm, the support level is coming up, and even when it falls in the midterm, the support is still holding. Even just a little while ago, if you look at it, the 21, 61, and 120 moving averages were all aligned in order, and even back then, they were arranged in the right sequence. It surged sharply, then dropped again. Currently, what seems like a small correction could lead to a significant loss if you buy at a high price and sell at a low price. So, companies with high volatility tend to benefit more if they can handle these things well. So, from the current perspective, there is a good flow going on, and I think you can look at it this way. Lastly, let's take a look at just one financial stock. I'll show you the data for just one financial stock. If you look at the financial data, you can see that this company holds most of its assets in cash. So if you look at the overall assets, it's about 1.8 trillion won, and out of that, about 1.5 trillion won is in cash assets. Most of it is just held as cash assets. Cash assets are either cash or short-term financial assets, Examples include time deposits maturing in less than a year, savings accounts convertible to cash within a year, and even funds or ETFs. So, when you have money coming in, you have to create a budget, and when you create a budget, it's good for the company to have cash. Earlier, I mentioned that cash flow was positive in the financial activities, but if you look at this table, the cash flow from financial activities is about $55 million, while the cash flow from operating activities is much larger at about $83 million, and it continues to accumulate. So, the net profit also matches the size, so the margin continues to grow. That's why, even though the company hasn't been making a profit directly from net income, the profitability is low in that part. But this industry is one where the margin can go up quite a lot. If financial activities are positive, the company is taking on more debt or receiving more investment, so the debt should increase accordingly. However, the debt has only increased slightly, not proportionately to the positive financial activities. The capital increased from 15.8 billion to 16.2 billion between 1,579 and 1,628, a 1-month period. The number of shares rose from 5,240,000 to 5,300,000 during this time. New shares were issued through a stock option. If the option was exercised, it would have generated cash inflow. Because there is cash coming in, those cash inflows are recorded as a plus in the cash flow from financing activities. On the cash flow statement, cash inflows are recorded as positive, while cash outflows are recorded as negative. So, when you issue stocks and receive cash, or when you borrow money and the company gets funds, those are recorded as a plus. That's the way it works. So, if you look at it, you'll see that there are no problems with this method. So right now, companies have a lot of cash. And this part is because the business is making a profit or because there are a lot of investments coming in. These situations happen when companies receive capital or similar things. And since this company is providing subscription services, even if there aren't any special events in the future, the cash flow is expected to remain stable and healthy. With consistent sales growth, the earnings per share growth rate can temporarily surpass the sales growth rate. For instance, if sales grow at 20%, earnings per share growth may be even higher. The net income growth rate can reach 40% to 80%, a characteristic of very early stage structures often seen in such industries. Previously, the stock price frequently doubled annually, but the pattern has changed due to the industry undergoing a period of transition. So I thought it would be good if many people could share the list, and if you visit different sites, you can keep getting news and information. If you could share even that information, I think it would be great if many people could develop the list together. Let me say it again, but it's not just about picking stocks that are currently rising. It's more important to look at the data and see which companies have good fundamentals, good valuations, and good earnings, and to analyze and select stocks based on those things. Depending on the video you are watching or the investment style you have, there may be companies that suit you well and others that may not. So this corner is not about recommending just one stock, but rather about helping many people find their own direction and make better decisions.
If you use the video,
I think it will be good. Please subscribe to the channel and like the video if it helps. Thanks. Thank you.